Content creators are making millions of dollars streaming on meme coin launchpad Pump.fun, and the platform itself is going mega viral. In this video, I'm going to break down the fundamental metrics of Pump itself. I'll look at how much revenue it's generating from all this activity. Hint, it's in the hundreds of millions of dollars. I'll look at the buybacks they're using that revenue for, and we'll look at other metrics to help assess Pump both as a token and as an investment. Now let's get into it. Before I get started, I want to remind you that nothing in this video is financial advice. I'll do my best to show both sides of the thesis for this token, but even if you agree with my ultimate conclusions about it, you still need to do your own research, and don't take anything I say as a suggestion that you should or should not buy a particular investment. All right, so let's get into Pump itself and exactly what it is. If we go to this very hectic website, this is Pump right now. You can see the leaderboard of all of the tokens being launched. Most of them are tiny, a few $1,000 market cap. That's where the vast majority of these tokens start, live, and die. However, occasionally they break out, and we've seen over the past year some break out into the hundreds of millions or even billions of dollars in market cap. The new feature that's going viral is this new live stream feature where people are live streaming alongside their tokens. And you can see that you've got different types of live streams. Some are actually people, some are animated. I'm just choosing it at a random time. But this is a big part of what's causing the recent virality, in part because, and I'll speak now as someone with quite a bit of experience making content myself, because if you are on the lower end of content creators, even the medium end, it tends to not be that profitable of a business. I mean, in my case, for example, this channel has about 60,000 subscribers, which I'm quite proud of the ability to grow to that. But even with 60,000 subscribers, which is a good amount of people, it's still a challenge to actually monetize and turn that into a profitable, scalable business. And then you have all the people who, which is far more, who have, say, 5,000 subscribers, 10,000 subscribers, maybe fewer, 1,000 subscribers. And that's still extremely valuable. But those people are going to have a lot of trouble monetizing. Forget YouTube ads. I mean, it's negligible even at my channel's size, let alone those sizes. And so what do those people do? Right? Well, Pump.fun is providing a new way for them to monetize by live streaming alongside these tokens. And if they're able to create a compelling live stream, then some people may see it, they may bet that it's going to continue to gain viewers, and they may invest in the token. And I think this is really, if I'm being honest, I think this is kind of towing the line between gambling and investment, because you are oftentimes betting that this stream is going to go viral, right? That's kind of what you're predicting. But it can be so tough to predict these things that there's a huge amount of chance and luck involved. But regardless of what you actually think about the platform, it can't really be denied that it is hugely successful at the moment. So let's look at some of the metrics surrounding this. To start, just looking at tokens launched over time. Here I found this dashboard on Dune. You can see that they had a huge peak earlier this year. This was, as you recall, when the Trump meme coin launched, and then followed by a steep decline after that, and then a continued decline over the summer, especially as they faced increased competition from other launchpads. More recently, this has surged up again. You can see that they're looking at 30,000 new tokens launched every single day. Again, most of these are small. Some of them are larger. And Pump.fun is accruing fees, accruing revenue from all of that. And in fact, their revenue has been quite substantial. I'll hop over to DeFi Llama now to take a look at Pump's fundamental revenue. And we can see that month to date, it's generated about $33 million in revenue. Last month, it had $46 million in total. By week, we see a noticeable growth trend over the past couple months as this live streaming feature has grown. And you can see that just last week, Pump generated $16 million in revenue. Cumulative since launching last year, it's generated over $800 million in revenue. It passed that milestone just this past week. And if you were to look at the annualized revenue from the past 30 days, you would see that It's about $700 million in annualized revenue would be what you get if you were to extend the past 30 days over the next year. So that's a lot of revenue. And I think if people have been around in crypto for a while, then they might be surprised by this, or you might not even think of assessing tokens in this way, because historically, the vast majority of tokens had nothing resembling revenue or resembling actual business financial metrics that you could assess them with. Either they were a network, which you don't really doesn't really make sense to assess this way, because it's more about people holding it as a store of value or holding it to pay for network fees, or they were some sort of protocol that didn't take a cut of the fees being spent on there, in which case the revenue was zero despite having a lot of users, or the revenue was so small that any attempt to evaluate the token based on that revenue, you would have basically concluded that it was way overvalued. But now you have platforms like Pump that are generating a lot of revenue, right? Again, annualized to 700 million, and that's after a steep decline from earlier this year. And so what exactly is going on here? My theory on what's going on is you have the emergence of this class of apps. Some of them are turning into super apps for speculation. Hyperliquid is one example. It's a perps DEX, so you can trade with leverage, trade futures. You have Polymarket, which doesn't have a token yet, unfortunately, because it's one of the few crypto apps to break out to the mainstream, but it's a prediction market. It uses binary options. You can bet yes or no on an outcome, and you get a payout if you're right. And they're now extending that not just to elections, they're extending that to betting on financial markets, to betting on earnings reports, all sorts of other things like that. It's like a meta layer for the financial system. And then you've got Pump, which is taking a different approach, because it's taking this social approach to speculation, where you can bet on tokens that live streamers have. You can bet on whether a meme coin will go viral, and if you are right, you make a lot of money. And whether you're right or wrong, Pump.fun makes a lot of money, which is what they are doing. And in truth, I do think this is like probably hurt the reputation of crypto in a lot of ways, and I think it's really impacted the past crypto cycle, because it's made it tougher for things to go viral. But basically what you have is this emergence of these very profitable speculation super apps, and they are in different ways starting to go mainstream, where they're breaking out of the traditional crypto Twitter audience. And I'm highlighting Pump in this video because it is the latest iteration of that to go viral again. And you can see the revenue is, it was declined from earlier this year, but it's had a resurgence recently. And TVL, so deposits, because they also have Pump Swap now, so you have deposits on here. You can see TVL has grown about 10x since March, so they're developing their own liquidity, and that's just been growing basically in a linear fashion since earlier this year. And how does this play into the token itself? You may be asking, what does this mean if you're interested in investing in Pump as a token? Well, let's take a look at where this revenue actually goes. Pump uses its revenue to perform buybacks on their token. And this is from another Dune dashboard. Since July, they have performed about $96 million of buybacks on the Pump token. And that's quite substantial, because the total market cap is $2.864 billion. After going up, the market cap was much lower, but after going up. And so it's about 3% at the current market cap. They've also, you can look at it in terms of Pump, they've bought back 23.6 billion Pump tokens, and the total circulating supply is 354 billion Pump tokens. So I'm estimating now something like 7% of the supply they've bought back in just a few months. And this speaks to the high revenue they have, as well as just the generally high value accrual that they're driving to the token. As far as the supply of the token, we can see that there are substantial unlocks to come. Only 43% is unlocked, 24% is TBD, and 33% is locked. And so there will be dilution coming in the future. However, I don't actually consider that to be a huge risk for this project, given that 43% unlocked for a token that launched a couple months ago is relatively low. and the fact that they have these substantial buybacks should be able to more than make up for any increase in sell pressure from unlocks, because there'll be buy pressure from buybacks. That being said, I do still see substantial risk with Pump. The main thing is that their recent performance, including their revenue and price performance, has been driven largely by their platform going viral. And virality is one of the toughest things to do, and especially staying viral as a social platform, because that's essentially what Pump is one of the toughest things to do, because it requires a combination of luck as well as a two-sided marketplace. And Pump has now done it twice. So they're in a infinitely better position than really any other team in crypto that's trying to do this. That being said, it can be really tough to predict whether these things have any staying power, and it's not the same as some sort of subscription app or even a financial business like a lending application, because 1 week you could have something viral, the next week something else could be trending, and then revenue would completely fall off, sort of like we saw with Pump earlier this year. That being said, my final conclusion is that if you are looking at crypto tokens as a pure value investment, you're looking at it from a fundamentals perspective, then I think you would be remiss to completely overlook Pump, despite the fact that it relies so heavily on this speculation, live streaming virality, simply because of the huge numbers they're putting up. It cannot be ignored. And the fact that they've been able to put up these numbers again and again over the past year. Another thing I'll note about this is that if you are looking for protocols that are generating high holders revenue that's accruing to token holders, then Pump and Hyperliquid are very much in a league of their own right now. We can see that the two of those are generating a majority of all revenue that's accruing to token holders. There's a few others that stand out. Jupiter, Aerodrome, Sky come to mind as also having substantial holders revenue, but Pump and Hyperliquid alone are a majority. By the way, I send out analysis like this in my newsletter on my Substack several times a week. If you want it more frequently, check it out, newsletter.dynamodefi.com. #1 newsletter focused on DeFi analytics. And if you want to see more videos like this one, be sure to like and subscribe. Until next time, this is Dynamo DeFi.